So, day two of the boot camp. Um, Day one was pretty chill. You didn't have to do much but sit there and watch me yap about discipline for 27 to 30 minutes. Yeah, but I mean, everything I said on day one, discipline is one of the most important parts of trading, if not the most important part of trading. But today, we're going to actually get into the charts. We're going to be going over trend and how trend is your friend and how trend alone can make you a better trader. So yeah, I'm gonna hop into the charts, show you some real life examples on how price makes up trend in the markets, as well as going over the three types of trend and how you can capitalize off those. Uh, well, waste no more time. We're gonna get right into the charts. So boom, here's the chart. Getting into trend. Before we start looking at the candlesticks and how trend works in the actual market, I'm gonna show you an example of what trend looks like. I'm just drawing it out. So you have three different types of trends. Let me type those out. Three different types of trend in the market. We have one, an uptrend, which is price, which we'll talk about price as well. Is when price is making higher highs and higher lows. Two, downtrend is when price is making lower highs and lower lows. And then finally, which is the worst out of all of them, you got consolidation. Bear with me, consolidation. Yeah, consolidation. That's when the market. I hope I spelled that right. Is when the market is moving side to side, or it's not making highs, not making lows. So boom. Now I'm gonna show you what these three trends look like. So for the uptrend is when price is making a higher high, and higher low, higher highs and higher lows. So that looks like is boom. Have price make a high, and it makes a low. Then it comes up and goes higher than that high. Then this low is higher than that low. This high is higher than that high, and so on and so forth. So you have a high being formed, a low being formed, and then the next high goes higher, is formed higher, and then the next low is formed higher, and then so on and so forth. So this is called an uptrend or bullish trend. So when you hear people talk about bullish trends or you hear the word bullish, it basically just means the market is moving upwards and trending upwards and going higher. That means price, which is the cost of the stocks, is going up and rising. Excuse me. Okay. So downtrends look pretty similar. You're just starting from the upside most of the time. Upside, high, low, lower high, lower low. So yeah, let's try it again. Okay. Let's try this one more time. So you have high, low, lower high, lower low, lower high, and so on and so forth. And so on and so forth. Let's move this over here. This is called a downtrend or bearish trend. When you hear the word bearish, it means that the market is going down. Price is getting cheaper. The price of the stock is getting cheaper. The price of the index is getting cheaper. And then lastly, you have consolidation. I'm gonna try to draw this as accurate as possible, but consolidation, basically, we call it chop. Well, I call it chop. You don't want to really be trading in consolidation, but consolidation kind of looks like the market's just moving from side to side. The market's just moving from side to side, not really giving you any trend, not really telling you where it wants to go. I don't really want to try to spell consolidation again, but this is what it looks like. Yeah. So now that I broke down that, we can go into the chart and see if we can find any examples of these trends in the chart and help you to spot them when you see them when you're trying to trade and you see them. So let's get rid of all this. There we go. All right, so this is, let's go to the 15-minute. This is the 15-minute chart. This actually is what trend looked like today. As you can see, we were in a downtrend for Asia session. We were in a downtrend. In London session, we were in a downtrend. So we were in a downtrend basically all day until New York session. As you can see, I'm gonna show you exactly how I showed you with the thing, with the arrows the first time. So you have a high up here, you have a low. Then you have a high, you have a lower high, and then you have a lower low. Then you have a lower high, then you have another lower low. This indicates that we were in a downtrend. So we are bearish. So you probably want to be looking for confirmations to take trades to the downside. Okay. And then this trend happens on anything you trade. So I mean, we can go to MES. MES kind of looks the same as M and Q because they are correlating indexes, but show you again, high, low, lower high, lower low, lower high, and lower low, indicating a downtrend, indicating that price is going down. It's very bearish, and you probably want to be looking to get in trades that go to the downside, or look for confirmation to give you a trade to go to the downside. So yeah, you don't want to trade against the trend. You want to trade with the trend. Trend is your friend. Okay? I know it sounds corny or whatever, but let's type it out. Write this. Trend is your friend. Also, if you're watching these videos, I would assume that you're trying to learn how to trade. So with that being said, I would highly suggest that you get a notebook or something. Like one of these boot camps, I'm going to show you that I have a notebook full of notes from like when I first started learning how to trade. You got to treat this like school or a job because that's what you want it to be. So yeah, trend is your friend. Let's make this big. Trend is your friend. Trade with the trend. Write this down. Trend is your friend, meaning you always want to trade with the trend and not against it. Write that down. Or pause the video, write that down. Got it? Good. Alright. Perfect. So, this, you've seen it on MES, you've seen it on MEQ. Let's see, this is the Dows. It was in a downtrend as well. As you can see, the high, or we can start from this high. The high, the low, the lower high, the lower low, the lower high, the lower low, the lower high, the lower low, all the way down. Gold, go to gold as well. We have a high here. We have a low. We have a lower high. Okay, no, we have a high here, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, all the way down. So that was an example of, I believe, 1, 2, 3, 4 different indexes and 4 different stocks that show you trend. Now, you only seen examples of downtrend, so let's see if we can find an example of an uptrend that looks good enough for you to understand what it looks like when you see it. I guess this is okay. All right, so here we have a low formed, and we have a high formed. We have a higher low formed. We have a higher high formed. We have a higher low formed. And then we have a higher high formed. So boom, boom, boom. Well, those are kind of equivalent, but it's just a tad bit higher based off the candle closure. So yeah, let's see if I can find one more that looks a little bit better. Zoom into this. As well as I want to see if I can find an example of what consolidation looks like. Alright, so it's kind of choppy here. It's kind of choppy here, but see, 30 minutes, 30 minutes time frame looks like. Okay, this is a good one. This is a good one. Low, high, higher low, higher highs, and then highs, higher lows, higher highs. So that's an example of an uptrend. Let's see if we can see what consolidation looks like, which is probably one of the most annoying things in the market. This is trending higher. Does gold have any examples? Okay, so boom, kind of like right here is a good example of it. As you can see, price is kind of like bouncing between this like general area. Let's make this look a little more neater so you won't think I'm talking about the whole thing. Do this. Just this general area from here to here. And as your general area, you can see price is just bouncing, so you really don't have higher highs being formed or lower lows being formed. You kind of just have this bounce. So it's like a here, then we go here, then we go here. You could probably go here. You can go here. See how it's kind of like, it's just like going up and down. You have no higher highs being formed. You have no lower lows being formed. Price is just moving side to side. So yeah, breaking down price. So basically, candlesticks, these green and red things that you see here, candlesticks, they make up price, and price makes up trend. So when you see a red candlestick or red candlesticks, we're moving down, we're bearish. When you see green candlesticks, we're moving up, we're bullish. Simple enough. Certain candlesticks tell you different things. So the wick of a candlestick, which is this right here, rectangle out. This is the wick. You have wicks that come from the downside. You have wicks that are on the upside. These wicks show the lowest point that price reached in this 15 minutes time frame, because we're in a 15-minute time frame. So the bottom of this wick shows the lowest price reached, or how far down price went before ultimately closing bearish, ultimately closing bullish, which is the green candle, which is up. And we see that it closed bullish from the bodies. So you have wicks of the candle, you have bodies of the candle. The wicks give you an overview of where price would have gone or could have gone, and then the body tells you the story, or like what price actually did. So here you see at this big green wick, if you would have sold on how it looked when it was going down, you probably would have lost this trade. But if you waited for the candle to close and tell you the story based off the body, then you could have took this trade and made, could have took this trade and made a decent profit targeting. You could have made a decent profit off this trade if you waited for candle closure. Remember, wicks tell you what could have happened. Closures in the body of the candle tells you the story, tells you what the candle actually wants to do. So that was a pretty basic breakdown of candles, not too complicated. And remember, candles, candles, let's type this out here. Candles make up price, or price action. Price action is just what price is doing, how the candles are moving in the market. Price makes up trend, which is if we're making higher highs, which we're in an uptrend if we're doing that, higher highs and higher lows, which we're in an uptrend if we're doing that, or if we're making lower lows and lower highs, which we're in a downtrend if we're doing that, or if we're just moving side to side, which means we're consolidating, which you probably don't want to take a trade within that. Price makes up trend, and trend is your friend. Trend is your friend, which we went over earlier. That means you want to follow the trend. You don't want to trade against the trend, because trend tells a story. Trend tells you literally, it's like the cheat code. It literally tells you what price wants to do. It tells you that it tells you that price wants to go up, it tells you that price wants to go down, and then it's your job to find confluences that align with this. So yeah, that was a pretty simple breakdown on trend. That's the end of day 2 of the boot camp. If you enjoyed this video and want to see more of me, trade recaps, boot camp videos, investing videos, educational, income-based videos, make sure to subscribe to the YouTube channel, click the post notifications, and like the video. If you have any questions for me or want me to cover a specific topic or concept next in the next bootcamp video, let me know. I kind of don't know what I'm going to do next. It's either going to be another mental video or another simple breakdown video getting into the charts. So that's that. As always, it's been a pleasure. As well as, oh, let me not forget this. If you want to catch my trades live or be a part of a community of people that maybe might be better than you at trading, the same level you're trading, or a tad bit lower than your experience of trading, and you want to build as a community, and so you don't have to do this journey alone because the trading journey is hard, I would ask you to join the Income Architects group Discord down below. Yeah.